Hi, I'm Doug McKenzie from Fintech Finance, and on this episode of the Paytech show, we're looking at payments and whether banks are going to be taking a backseat or leading the way when it comes to innovation. Heading up the episode, we have Banking Circle, a company that provides B2B payments globally. Alongside them, we've got industry giants WorldPay and Square. Firstly, Ali Paterson sat down with Anders la Cour from Banking Circle in their headquarters at London to find out what some of the challenges are facing the incumbent banks when it comes to the new technologies in 2018 and beyond.
So why are all these changes happening now in the banking and payment space?
I think if you look at it from a structural perspective, with the adoption of the payment service directives in 2009, it was allowed for non-banks to offer financial services with that kind of deregulation. The financial tech industry was more or less created. It has had a huge impact over the last 9-10 years, and we've seen a lot of financial tech businesses moving into the part of the value chain where you service the consumer or the corporate, but where you don't do anything that would typically be back office functions outside your domestic core. This is a highly profitable space to be part of. And I think over the next 5-10 years, we'll see an even further separation of the value chains in the financial industry. So we might probably see the banks try to move up the value chain to stay close to the customers and not be left as a commodity or utility in the lower part of the value chain.
Oh, so you don't think they'll become a utility?
I actually think if you look at the industry right now, I think many of the banks are well prepared for the next 5-10 years. They obviously have a lot of legacy, but I think if you look at it from a mindset perspective, they are the vast majority of them aware that they need to move up the value chain and digitize and literally try to stay close to the end clients, while getting rid of a lot of the non-core back office functions that we see. So no, I don't think the fintechs will be a major threat for the banks, but I definitely think you would see banks becoming more financial tech in the way they act.
One expression that I hear that I absolutely love is that banks are looking to become less like fortresses and more like forests, more like ecosystems, and working with sort of various sort of third-party providers. Do you think that's a sort of strong model for them to make themselves more adaptable and agile?
I definitely think it is. I think we'll see that, especially in the short run, that banks will try to work with several different fintechs applications to try to find out what works and what does not work. And as soon as they have identified that, they might stay with some of the partnerships. They might try to develop some of the capabilities themselves to keep and maintain the client relationship and the stickiness towards the end clients.
Jesse Duraguska from Square gave us his opinion on whether he thinks banks are actually becoming utilities in the future.
A lot of traditional banks, your Barclays, for example, your Bank of America over in the US, they tend to be providers of the payment terminals to merchants and look after that part of the business. With more and more companies moving towards you guys who perhaps would be turned away from the incumbents because they're quite expensive, is there a danger that banks are almost becoming a bit of a utility in that regard? Is that something that you could see the whole ecosystem moving towards, and banks almost dealing with the back end as opposed to the customer facing side of things?
It's a good question. I think the banks have to contend with changes just like everybody else. They do provide a tremendous utility, an amazing source of capital in big countries and local communities as well. But the customer-facing piece of banking is changing over time. Card acceptance, one great example, where Square is a great destination for the smaller customers. In some regions, smaller loan opportunities for a company like Square versus a big bank, which is good at giving very big loans but not very small loans. So I think they'll have to adapt over time and understand their role in the ecosystem. Banks have been partners of Square throughout the world over time, and will continue that for sure.
Ron Khalifa from WorldPay told us how he thinks some of the incumbents can actually increase their pace of change and stay relevant 2018 and onwards.
What do you think is really required to succeed in the next frontier of payments?
Look, I think payments was principally about cash and checks historically. It's now much more about different payment methods. It's about contactless. It's about mobile. It's about the proliferation of payments that's happening. And the consequence of all of those things is that complexity that is at the heart of the payment has got to be something that's taken in the background. And it's not seen by those who are interacting with the payment itself. So the friction that's associated with payment has to disappear. And if you think about mobile, it's skyrocketed in the last 2 years. 2017 saw something like a 320% rise in terms of in-store mobile payments. That's a huge amount. So people are much more comfortable with using mobile technology in stores to pay. Apps have facilitated that, obviously. Then if you start thinking about the proliferation of payments, the influence in terms of these new range of acceptance channels are starting to help in terms of AI, in terms of blockchain, in terms of wearable payments, in terms of invisible payments. And all of that's enabled by data. Data is at the heart of what payments are about. And that's where the interaction starts to come in. It's not about processing a payment. That is almost an insignificant part of what's happening. The real value is how do you bring your customer and your merchants together so that they have a better relationship, they have a better understanding of each other's needs and each other's capabilities. And start to anticipate those things is much more about how payments is going to evolve.
Is there a danger that banks are, particularly the big retail high street banks, could almost end up as a utility and just really a brand name and everything through third-party providers such as yourselves? Would that be a bad thing if that happens?
I think it depends on the strategy that the bank's got. Each bank has decided in its own way whether it wants to be in this type of business, whether it wants to be in merchant acquiring. Some have divested simply because they couldn't invest adequately in the infrastructure to do that. We have spent somewhere in the region of £500 or £600 million on a technology infrastructure to support this cross-border global capability that we've got. Banks have got so many other priorities, and the ability to get something that's in the space of merchant acquiring at the top of the list for a bank when they've got many things to worry about, got current accounts, savings, deposits, mortgages, insurance, etc. There are just so many things they've got to do. So some have decided that they can't be in that business and are increasingly looking to outsource it, whilst others are starting to work in terms of partnerships. We've got strong partnerships with banks, and frankly, those work really well, where we enable the distribution, where they enable the distribution for us because we've got the capability and the technology. So there are different models depending on the strategy that the banks have got.
Now, we've heard a lot about what the banks are doing in the payments industry, but I wanted to ask our interviewees, who are a bit more agile, what they were doing in the payments industry 2018 and onwards.
I always find it interesting what organisations decide to build in-house and what they decide to have third parties bring in. So when it comes to some quite profitable and lucrative areas such as cross-border payments and lending, why would an organisation want to work with you guys as opposed to build their solutions in-house?
With the separation of the value chain in the finance industry, I think you'd see a lot of fintechs and also smaller banks act more as financial service supermarkets, where they would be the platform delivering the service, but where they would have someone manufacturing and delivering the products for them. And I think in that respect, if you do lending, you can do a lot of different stuff with lending. I believe if you look at mortgaging real estates, the banks would try to keep that in. That's a core service in a domestic market. But if you look at doing cash advances to merchants or maybe even revolving credit facilities for SMEs, it's a hard space to develop the necessary credit information in. You need to use a lot of different information that would not typically go into a credit algorithm. And in that respect, we would use third-party APIs to do that. APIs specialized only in that vertical and that niche. And that would be the kind of products that our clients would be able to get in a white label. And if you look at the larger banks, they would definitely develop their own solutions always because they can be in both parts of the value chains. But for anyone but the largest banks in the world, I would personally think it would make sense for them to get a product in. It's just a matter for us about we have scale, so we can deliver it at quite low pricing. And that makes, if you can get both the low pricing and the flexibility, why should you develop it in-house yourself if you can focus on improving your customer relationship? So that's at least our philosophy.
I lead the hardware team at Square. And for us, that means the design, all disciplines of engineering, manufacturing, operations, and distribution of our hardware products.
And what's your approach to this? What's your sort of ethos behind this?
So we try to design the best hardware in the world in service of the customers we're serving. For us, that means amplifying that message of inclusion. To make an inclusive piece of hardware, it has to be easily accessible, easy to understand, easy to get, easy to set up yourself, beautiful, attractive, engaging with customers, and all of that is the combination of engineering, design, manufacturing to come to a complete high-quality product at scale. Square was born in the era of smartphones and tablets. These are tremendously powerful devices that everyone has, and they can do a lot. They can offload a lot of the user interface, a lot of the communication, the sounds, the lights, the indicators, and that means the card reader can really be the simplest thing possible, which is to accept the card securely, manage encryption, and be light and portable and low power without all of the ornate buttons, screens, bells and whistles of traditional terminals, all of which were invented before the smartphone era.
We are a payment provider, and our business has grown up around cross-border activity. We were at the heart in the early 90s of facilitating what's now called multi-currency acquiring, which is cross-border payments essentially. So we tend to be pioneers of that. We've got the largest network in terms of the number of licenses that we've got. We've got licenses spread throughout the world. We've got them in the States, we've got them in Canada, we've got them in Europe, we've got them in the UK, we've got them in a spattering of markets across Asia. We were the first non-bank player in Japan to get our own license. We've got license in Australia, we've got license in India, etc. So cross-border payments is essentially what we do. We facilitate a retailer who wants to have access to multiple markets, and we do that through one pipe. We do that through one capability, one technology. I think of a particular airline who many years ago had something in the region of 30 different providers across the world. They went through an RFP and said, we can't cope with 30 different providers. It's costing them a lot in their back office. So they went through an RFP, and between ourselves and another provider, we do something in the region of now 90% of their global volume. 90% of their global volume. And that's made it so much more efficient in their back office. They don't need to employ so many people to cover settlement, reconciliation, cross-border management, cash management. Those are the things that are actually beginning to make a difference. So cross-border payments is essentially the world, is the environment of that we operate in. It's the strength of WorldPay, and it's basically the future in terms of how globality is going to work.
Now that's all well and good, but I wanted to see how these solutions would actually fit into the ecosystem.
We're now in a world of open APIs and PSD2 coming in, and there's a lot of collaboration going on. How do you look to form a part of the overall financial services ecosystem and work collaboratively with banks and third parties and all the fintech companies out there?
What we've invested in more so in the last few years is understanding the seams between the different parts of the service and turning those into exposed APIs for our partnerships, where we can partner our payment system with point of sale or our hardware with other people's point of sale, offline commerce with online commerce. And we've done this through careful management of APIs. It lends to a much bigger way to solve big problems. We also have to be very mindful that those seams are pristinely crafted and don't undermine the quality of the experience we want to deliver.
WorldPay has now merged with an organization in the States called Vantiv, and that has enabled us to be not just number one in the UK where we were previously, or number one in e-commerce, but also number one in the US. And as a consequence of that globality of our offering, that's essentially the thing that makes our difference. So we now can work across geographies, across different payment methods. We've got access to 320 different payment methods. And that's where success is going to come, simply because of the fact that the world is much more global. And as a consequence of that, retailers, whether they're physical or online, don't want to have multiple relationships. They can't afford the legacy challenges that go with that. They want to be able to manage their cash in terms of cash pooling. They want to be able to have instant reconciliation and instant settlement. Those are simple things, but they're very complex to do. So the things that drive that are scale, and payment providers have got to have scale in order to do that. They've got to have access to distribution in order to get new customers. They've got to have licenses that are relevant in different markets. And at the heart of all of that is to make sure they continue to spend on technology so it stays at the forefront of what's needed.
I think what we try to do is to position us in the part of the value chain where the banks fear to end up. If you end up as a utility with a legacy cost infrastructure, you're not very well positioned, because you would lose the contact with your end clients, which is where the most profitable part of the value chain is. So what we have done is building the utility that can operate on a very large scale, on a global scale, and which any incumbent in the financial industry can use for the services and products that are non-core for them. They can get them as you would literally get the pipes and plumbing of the financial industry, and then get them from a utility that does not compete with them. And I think that's the philosophy we've had, that we do never compete with our clients, and we allow them to focus on the part of the value chain that is most profitable for them. And I think the role that we will hopefully will see us and other utilities when they emerge is that you'd get a much more separated value chain in the financial industry.
Would it be, as well as your great big, multinational billions of dollars moving all around the world, would you also work at the smaller end of the scale as well?
We definitely work at the small end of the scale. I think what we do is we work with any business that is licensed. So we are a utility for other financial businesses. So if you're a large corporate, you can't get direct access to us, because then we'd start competing with our clients. But for any financial businesses, whether it's a large bank or small bank or a financial tech business or a pure tech business with a financial license, they can work with us.
Next time on the Paytech show, we look at card security technology.